Welcome to the Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is November 3rd, 2023. S&P currently sitting at 43.63. Obviously, I am not David Zarling. It is Ian McMillan and Kevin Ferrari on the podcast this week. And I have to say, Kevin, there's something about that 43.63 number that sticks out to me.
Mm-hmm.
And that is that it's above 41.80.
Ain't that something? We were just last week talking about below 41.80, and that did not stick very long, did it?
Last week, you and Dave were on the
Mhm.
podcast while I traveled to Virginia, and a pretty unfortunate week for stocks. In fact, I think Friday we closed on the lows of the week. We broke below the 200 a day last Monday on the 23rd and continued that lower throughout the week, finishing the week at 41, basically 4,100. And this week, all of that plus some has been taken back.
Yeah, it's been quite the week. They definitely didn't hold anything back.
Huge rally from stocks this week. So we are back above 41.80. It is what it is. We were below for a few days. We're also back above the 200 day. And not only that, we are back above the August 2022 highs around 4,300, 4,320. So, and we had broken below those back in late October as well. So a big move, particularly the last 2 days. Tuesday was a big day, but Wednesday and Thursday, big gap ups all across the board. Good participation. So a couple of these horizontal levels have been fixed for the time being.
Yeah, for sure. And actually Wednesday, kind of looking at that candle, that upper wick kind of just kissed the 200 day, which I actually thought, maybe we just kissed that and roll over. But yeah, they quite the gap up after that. So it definitely was not the case.
I was too, Wednesday we rallied in the 200 day from below. So, okay, no, not a big deal yet, but big gap up yesterday and a big rally. Like I said, everything. I think we had an 83 or 84% up day yesterday, if I remember Dave's statements correctly. And today we're looking at so far. So yesterday, NYSE finished with 89.8%. We're going to call it 90% up day. Today, so far, we've got a little over a couple hours before the market close. We are tracking for an 82% up day. So rusty.
Yep.
Rusty in a sense. I don't know where this falls in the Whaley breadth thrust or the some of Walter Deemer's work. So I'll be interested to see their takes this weekend on what's happened there. But certainly some potential here. Bounced right off. I think, what was it, Kevin? Anchored VWAP from the lows?
What was it? Could be. I know one of them I was looking at kind of like on a weekly is actually like the highs from like the start of 2022 and like January. There's
Oh, really?
Around there. Not
Okay.
as clean. I think he actually broke. I gotta see if I can get that back up. I think he actually broke below it for a little bit. So where was I looking at? Actually, I think I was looking at SPY for that.
Yeah, no, that does look right. Yeah, it looks right. Yeah.
I broke below it for a couple days, but then, kind of just picked back up. So, not perfect, but right around that point.
Yeah. Huge move. Now, is this some type of breakaway thrust? Maybe not the purest breakaway gap, because it's not like we're moving to new highs necessarily. Some individual stocks, obviously, but on the indices, but certainly something to take note of. The next level. So if we take the S&P, again, we talked about 4180, we talked about the 200-day moving average, we talked about the August 2022 highs. What's the next shorter intermediate term level that you would be watching for?
Yeah, I think, which we're pretty much kind of almost there right now. I think kind of that 4380-ish level, at least for me. I mean, kind of October of this year, we tried to get above that, couldn't really do it. I mean, it kind of served as a little bit of support back kind of late August of this year as well. So a little bit of an inflection point, I guess, is the most, current level for me, which actually kind of the way like this daily candle is forming now.
We're there. Yeah.
It'd be kind of interesting how it closes today.
We consolidated and rolled over the last time we were here. Or who knows? I mean, maybe we're gapping to 4,400 on Monday morning. Certainly a turn of events in the positive this week. So if we get away from stocks, obviously it's the most fun topic to talk about, not the only asset out there. Have we gotten any type of reprieve from anywhere else? Rates, bonds?
Yeah, I mean, a little bit of pop from bonds. I don't know that we're necessarily out of the woods yet, kind of in that space. TLT kind of bumping up, kind of that $90 area there, and looking like it might kind of roll back over. AGG kind of same deal, around 95. So this week kind of moving, but still doesn't give you the warm and fuzzy feeling that necessarily it's anything you really want to participate in.
Well, and I think for me, what I go back to is, okay, so these short, I mean, evens, we'll get some intermediate term moves and bonds. For me, the trend has been broken, the long term, and we are, again, I think we've all been pretty clear about this on the podcast. It would be our opinion from a technical perspective that we are into the next 30 to 40 year cycle in rates, which would be an upcycle. So yeah, we can see rates move from, here in the short to intermediate term. But for me, the long-term picture is still up for rates and down for bonds. I'm sure that there will be good months and quarters in between, but until something, and it would take a lot to drastically change the trend that's kind of been started over the last few years, in my opinion.
Yeah, for sure. Like especially mortgage rates too, right? I mean,
yeah, exactly. Mortgage. I mean, it just is what it is. There's no reason getting upset. This is just the way cycles work. Again, I would say the evidence points towards we're done with low rates and the next 30, 40 years. I don't know if we go up to where we were in the late 70s. Who knows? But do believe rates continue to march higher for the next multiple years.
Which I know we kind of covered, we're already talking about the S&P, but I mean, just bringing that point up, next leg in the cycle, we're kind of talking about that a little bit before we even really got on.
We did.
I mean, you threw that out there where, do we just kind of continue blowing past 4380 and kind of get back into like, 4600 where we're just starting to like define a larger range? Maybe something more like, what you're saying back in like what 60s, 70s, like that, where it was a little bit more kind of range bound.
Absolutely range bound, big ranges. Back then you had multi-month, multi-year rallies. Yeah, that is.
It'll be interesting to see.
Is it one of those things where the market, what's that saying? The market doesn't rhyme, but I can't remember that saying. Is it something similar? Well, yeah, like maybe it doesn't look like the 70s where you get there and you're flat. Maybe it's not as, I mean, the 70s were pretty well defined. It's amazing when you pull up a chart, the range that, and I think a great example of technical analysis and supply and demand. But yeah, absolutely. I think
that will tell, right?
I think that's got to be pretty high on the scenario list.
Right. For sure. Definitely change of pace, right? Not going, I mean, obviously.
Yeah.
for me, I've never been through a rising rate environment. I mean, I've never been really necessarily alive for one. So, or at least an extended one, I would say.
I have not. I
All
personally
right.
have greatly benefited from lower rates. So
Mhm.
it'll be a interesting next few decades for young Americans.
I'm assuming, I think we probably brought that up after, coming back from the CMT symposium, right? I think it was Luis Yamada and Ralph Akinpora that were kind of up there to close it out. Kind of asked that question, how many of you have worked professionally through
Yeah.
a rising rate environment, and there definitely
And
weren't a lot of hands up.
maybe John Bollinger's in there.
Mm-hmm.
And even then, how many people were making you could have been involved in the industry, but how many people were making investment decisions?
Yeah, exactly.
The dollar. So dollar sideways for, over a month.
Mm-hmm.
Probably like 5-6 weeks. Held up really well above this 105 level if we're using DXY, the US dollar index.
Which, and after that run that it's been on, I think.
One of the headwinds for stocks has been this stronger dollar. Dollar bottomed in like mid July-ish, and stocks ended up peaking, maybe like a week later.
Mm-hmm.
We look at something like the S&P. So sideways, not a lot happening with the dollar over the last month, as obviously stocks did not have a great October. But, Kevin, a potential turn in trend here today.
Yeah, today breaking down below that 105 level pretty well. It's kind of testing kind of 105, I guess.
Yeah.
If you
I guess
look at
105.5 was a better
right,
clear line in the sand, broken. It's one day, so we'll see if this continues. But now we've got the dollar maybe going from headwind to tailwind.
Mm-hmm.
In the current, right? That's been the current mantra, the current environment that we are in is that weak dollar is good for stocks. As we know, there's other environments where strong dollar is good for stocks. But right now that is the mindset that has set in. So, and that seems to still be holding true. Big drop in the dollar out of this range the last 2 days. Huge move for something like the dollar, I would say.
Yep, for sure.
So if this holds, then maybe we see strength from emerging markets. As strong as U.S. stocks were yesterday, there's some really good areas from foreign equities. Latin America, Brazil, Mexico, all had really good days. And for the week, Vietnam up there, Mexico, some other areas.
Yeah, like Japan.
South Africa. I know that these are not Singapore. These are, is it a beta thing because these were all bottom dwellers for so long that they get, right? Then that's the other side of the argument is that we're not really out of the woods yet. No. I would say we've still made lower lows on the indices this whole time. Yes, the last 3 days has been a strong rally. And is this just one of those things? David Settle, great technician, CMT, had a good stat out earlier. And it's just something to keep in mind is that in the 2022 downtrend, we had 3 instances where the S&P was up 5% or more in a 5-day span. So essentially a week like this week. And it kind of think it goes to David Keller's point. He had a great point. Bear market rallies are very, very strong, very quick. I think he used the word seductive, which I think is a great
word.
It's a great analogy. And how much of this was short covering? How much of this is legit institutional long-term buying? Big funds saying, yes, I want to own stocks here, and I want to own them for the next 3, 6, 9 months. We don't know that. We know that going into this week, things were extremely bearish. There were some metrics out there that, we could go back to 08, 09 levels in terms of bearishness. I know that CTAs were I believe they were pretty net short coming into this week as far as their S&P exposure. So how much of it is a relief off of that? I would still see not a lot of things. I mean, we're above the 200-day. That's big. We're above 4180. That's big. As far as the trend, we talk about those horizontal levels, but as far as the trend, it's a counter trend rally.
Right. Yeah, it's kind of interesting to see you talk about short covering. I mean, if you just kind of look more so self-contained within this week, like volume today is quite a bit less than it was, throughout the rest of the week. So is it one of those things where you get quite a bit of short covering? That's where kind of your gaps come in. Now you're coming into, that 4380 volume starts to maybe tail off a little bit, and then do you roll back over?
Yeah.
Yes.
Short-term things have been fixed. All 4 major indices are back below their early October lows. So positive. And I think we were looking at the weekly candles earlier, Kevin. And if you the S&P, I mean, you've basically wiped out all of October's losses this week, maybe even before yesterday. So big candles. I'm sure in everyone's weekend chart review, they will be seeing the same thing across multiple areas. You can say the same for semiconductors and lots of areas. Homebuilders had a very strong week.
And we're talking kind of before the ARC funds too.
The ARC funds
line up, seeing some action.
Regional banks, as much as crap as we give them, hey, they got it together. They needed to get it together. They may have just done it, which would be great. It would be great for small caps. It would be great for the market. I mean, banks in general, in an uptrend, again, as we like to say, they don't have to outperform, but you gotta have some of these things participating. Transports, big. Now, transports had a really bad week last week. So if you look at IYT, this week fixes a little bit of it. Same with XTN. So your transports one still out there with some work to do, but for the most part, at least on the major indices, not too bad from a technical perspective. Anything else that you would like to leave our listeners with before we sign off for the week, Kevin?
I mean, you kind of, touched on international. I guess just one thought. I'd be curious to see, kind of previously we talked about kind of some of those specific areas internationally that were kind of defying that correlation with the dollar being so strong recently. Japan, we kind of touched on some areas of Latin America. I guess if the dollar does roll over here, it'd be kind of interesting to see if those areas kind of pick up where they left off, or do you get maybe kind of some new leadership there? Talk about weekly charts. So if you look at Mexico on the weekly there, that's a pretty interesting candle, and really kind of that $60 area kind of been interesting in the past. So be curious to see what happens there. Other than that, kind of in the commodity space, kind of the same as what we were seeing last week, kind of touching on sugar, kind of like coca there, kind of being the top 2 in DBA. They're kind of maintaining their pattern there. Cattle still kind of just hanging in there and consolidating a little bit. So I don't think, really in kind of this past week, anything's changed drastically there.
Cattle, sugar, sugar, yeah. Oil, and I think, did you touch on crude?
Not too much last week, but really kind of couldn't really get up above what kind of really sustain anything above $90. Kind of pulling back, kind of between $90, $92. Looking like it might want to kind of continue moving lower. So,
and the only thing I will leave with is just interesting. Could be something, could be nothing. But when you look at the S&P, so this last rally we had, I guess this kind of goes back to David Settle's comments, but very similar price movement in September 2022, where some big gaps, very juicy, very enticing, and then got hit with a big gap down. And so again, I'm not saying that they were in the same type of environment. We were clearly in a downtrend, back in September 2022, below the 200-day. We had just come off, a hard downside rally at those August 2022 highs, which we mentioned we were back above now in current time, but just similar behavior. It's something to keep an eye out for as far as a potential short-term reversion to the mean. Even if we know we don't lose 4180 and we don't lose the 200-day and all these other things, back-to-back gap and rallies in a sideways market, which, big picture, we're still in a sideways market. It would be surprising not to, at least in my opinion, I would be surprised not to see at least one of these gaps get filled in over the next week or two. I mean, hell, as awesome as the last 3 or 4 days have been, now the most healthy thing is probably going to be to go sideways for, I would at least think, like a week or two. Kind of digest this and hold up at least, because there will be some short-term profit taking, I'm sure. So if some demand can come in there, keep this sideways, I think that would be pretty ideal.
I think the early part of next week is going to be pretty interesting.
Yeah.
Kind of a couple different ways this can play out. Just the way today's kind of looking so far, I think that's what we're going to have to wait to find out. So,
alrighty, well,
got to build suspense over the weekend.
Yes, we will.
Otherwise, what do you have to look forward to, right?
Well, I will let you know in exactly a week from now how it all turned out.
Mm-hmm.
So with that, we will leave you to enjoy your weekend and hope everyone has a great one.
Yeah, for sure. I know at least around here, it was a little colder this week, getting back up into the kind of low 50s for the weekend. So maybe kind of the last hurrah before we kind of start getting into winter. So have to try to get out and enjoy it.
Yep. Have a great weekend, everyone.
Yep. Have a good weekend.